Welcome traders, good evening. I'm filming this for Monday the 27th of March 2023. Quickly, just a quick kind of admin thing or house cleaning thing. I'm sort of becoming a little bit fatigued or annoyed by my own format. I'm looking to mix it up a bit. So if you have any suggestions, anything you'd like to see, anything that you feel is not really consistently worth your while me adding in, it doesn't add value, please give me that feedback into the comment section. I usually check all of the comments you make on a Sunday if I don't before that. So if you feel you've commented and I haven't responded, it's usually just on a Sunday, if not before then. So I'm just feeling a little bit, I feel like I could be doing it better. And so today I'm going to try and clean it up a bit, but I'm also going to spend some time and maybe do a different format. Okay, so let's just have, for example, what I mean is I might want to spend a bit more time on currencies, look at particular currency pairs, potential setups, but maybe that's better in a separate format. That's what I mean when I say I want to mix it up a little bit. Okay, but a nice global overview of where the markets are, I think is always worthwhile. All right, that being said, let's kick off and go into the economic calendar for this coming week. Remember that the markets are mainly focused or more sensitive to do with anything to do with inflation, anything to do with market instability at this time. And so that means that things such as unemployment, housing indices, any kind of announcements or speeches, Bank of England or central bank scheduled stuff or price indexes, any of those kinds of things. So the market is going to be way more focused on that than it was in 2020 or 2021. So this week, yes, there's Bank of England. We've got some stuff on that, but really Tuesday, I think we're going to look at the consumer confidence coming out of the US, CPI data for the Aussie dollar, and Aussie dollar sits on my list of currencies this week on my watch list. So that's also one to watch. We've got the CPI data preliminary coming out for the Eurozone on Thursday. And again, final US quarter-on-quarter GDP, as well as unemployment claims in the US. Then CAD, Canadian GDP, month-on-month, and that's on 1:30 on Friday. Finishing off on Friday, 1:30, PCE price index as well, core data coming out from the US month-on-month. And so those are all areas where I think that there could be some increased volatility in the markets. Again, these are not for trading purposes, but more for which times to potentially avoid engaging in the markets, because the market, for example, we always have the forecast and the previous, and the market can have dual reactions. It can react, what was it compared to what it was forecast? Then it can respond later and go, well, what does it mean with regards to the previous numbers? So something could be lower than forecast, but still better than previous. And so it's still good, but it's disappointing. So the market swishes around a lot, and that's where that increased volatility comes from. Okay, so that being said, let's go across to the markets. And again, some of you are asking me which platform I use. I'm using PROREALTIME. I find it very easy and intuitive to use. I can create my own layouts. So that is at PROREALTIME. I think the link for it is in the description below. So starting off here with the US Volatility Index, I've highlighted this sort of orange band here, and I'm not really concerned until we start to enter that area. That's the kind of area is certainly above 30 and towards 40, where that area is where the market is potentially taking a bit of strain. You can see that it's done that in the past. This is kind of going back to beginning of last year. We've done it when we had COVID as well. You can see the outbreak here. I beg your pardon, that's 2008. This is here we go. This will be COVID. And so these are periods where the market is under quite a bit of strain. But you can actually see last week, we kind of came back, we got knocked back from that, and we're sitting down in this lower area. So the way to read that, or the way I read that, is that the market at this time is not especially on edge. But it's just kind of keeping an eye on that. Then if we have a look at the dollar index itself was very strong throughout 2022. 2023 is having a nice healthy correction on the monthly time frame, produced a nice bullish candle here within a bullish formation of the moving averages, broke the high of it, but has not at this time, and we have 4 or 5 days left, has decided not to follow through on that. It's really more importantly when we break the low of this bullish candle, that would be significant. At the moment, the market is in a nice daily downtrend, and the question is, are we going to have a bit of a double bottom there? We've generally got a bullish MACD. Could we have a bit of a double bottom in this area? We will see. So for now, my approach is generally trading it on a much more shorter term mentality. For example, last year we knew that there was kind of we detected within the later part of it that this was an ongoing kind of trend. This was the trend. Whereas right now, where we are, the market is almost on a month-by-month basis trying to decide what it's going to do. We're in different conditions. Are they connected to the moves we saw last year? Absolutely, absolutely. Because last year we saw the introduction of an energy crisis. We saw a war break out. And we have huge inflation. The markets were very much overbought, meaning they were just overpriced. And so we're seeing the consequences of that play out. Also, the markets, we really, until inflation is gone, and we get that war under control and the energy crisis appears to not be a crisis anymore, we're going to get this uncertainty in the markets. Although they have in many ways cooled down, inflation hasn't gone away yet. And the inflation, it appears at this time, and I'd be interested in other people's feedback on this, appears to me to be more tied to corporate profits than to do with the cost of people's salaries, but more to do with corporate profits. So that's where a lot of that inflation is being driven from. So the next thing is I'm going to just introduce my calculated instruments here so that you can have a look at these. Let's start off here with I'll just pull them off to the side. Let's start off here with the US dollar, which you can see as well, the dollar index there. Then let's go ahead and look at the euro. So essentially what I'm highlighting here is if I look at it on a weekly basis, we're not really going anywhere. On the daily basis, it's not trending anywhere in particular. So the euro pairs themselves are a little bit bearish, not really that bullish. Okay, look at sterling. Sterling as well, not really having done much the last week. The last 3 weeks has sort of dripped down a little bit. Overall, a little bit bearish, not otherwise excessively, compared to the Australian index. So Aussie dollar, you can see here, is actively way more bearish, a lot weaker. And Aussie pairs, because of this, Aussie pairs are sitting on my watch list this coming week. So don't forget we've got that Aussie economic calendar news coming out. I think it's CPI data. I'm just doing this from memory. But also we've really got, actually let me go back to, it doesn't matter. I've got so much we need to talk about today and I don't want to keep this video longer than 30 minutes. Kiwi is very similar as well. So we got a lot of Kiwi weakness. Then if we have a look, say at the dollar yen, at the Japanese yen index, you can see that's also creeping a little bit low. So we've also got a weakening yen. So all these will play out in individual pairs in relation to each other, but the Aussie and the Kiwi pairs right there are particularly weak. Let's have a look at the Canadian dollar. So you can see here the Canadian dollar in itself is generally strengthening. This of the whole bunch is a little bit more bullish than anything else. Everything else is a little bit bearish, degrees of weakness, except for the Canadian dollar, which is strengthening a little bit. So that kind of will play out in the other pairs. So if we have a look at the euro against the US dollar, we're trending upwards a little bit here. We've encountered some resistance at 1.09. And I'm looking to see if we produce any bullish candles in the early part of this week and take another run up to those highs, right? There is a very fair possibility that although we've got some resistance at that 1.09 level, that the flow of price is slightly more to the upside than to the downside. Sterling as well is definitely battling with some resistance there within a daily uptrend. So this week I want to see if this level of support holds and just see if we push higher. But they're not the most attractive charts to me. They don't look like they have really strong trends. But if I see a setup, I quite will take it from there. Whereas the Australian dollar, I really like the look of this, kind of tested this as support, rejected it as resistance the previous week. Some strong levels of rejection here. And therefore there is a good possibility here that this is likely to head down to 0.6550. The same will be for Kiwi dollar in terms of that looking a little bit more bearish than bullish. Okay, but having a look at the last 6 or 7 days, it's largely going sideways. Makes it incredibly tricky if you're a day trader to find entry opportunities when the market is swishing sideways. I used to have a little 4-hour window at the bottom of the chart here, which was a good way to look at that 4-hour time frame for day traders. That would give you a sense of whether there were trading opportunities there at all or not. Might actually just reintroduce that. And dollar yen continues to creep lower. I'm really here just looking to see if these levels of support hold. Otherwise, I'm just going to continue to look for shorting opportunities on those pairs. But it's not. There are times when those yen pairs can really, really move. It's almost simplistic compared to other times when the trend isn't that clear. Right now is one of those times where the trend is not as clear. Excuse me, in dollar Swiss, you can see, generally speaking, going largely sideways. It's almost range bound, finding support at below that 0.91 level. Looking at the weekly, it's just it's a waste of time for day trading opportunities and swing trading opportunities. Okay, dollar CAD on the other hand, you can see breaking through a level of resistance here, breaking through resistance over here, pulling back and attempting to continue. It's trying very much to continue to the upside. You can see that monthly charts. I'm really just going to introduce where this key level is sitting here. And this is what it's battling with, is that 1.3830 level up here. So it looks like to me it's going to likely to push up a little bit higher to test that level again. And then we'll see if there's any kind of a reaction to that. Just always keeping an eye on the dollar, Russian ruble, and really seeing this is drifting higher, but not a lot happening there. You can see that at the outbreak of the war and during a couple of periods, yeah, there have been spikes to the upside. It's creeping high. That's not necessarily a good indication for the ruble. It's an indication the dollar is strengthening, but also a strong indication the currency is weakening. Euro Swissy, you can see that it's got this obsessive relationship here on the weekly with that parity bobbing around, but to me looking more and more like it is going to reject that level and head a little bit low. We had a nice little bullish candle last week, the week before, I beg your pardon, previous week, and last week, indecision bearish candle. But overall, look at the moving averages all settling underneath this level and potentially will ultimately break out into a bearish formation. We'll see if that's going to be the case, but again, it's incredibly choppy, swinging this way and that way. Moving on to commodities. Gold. So we've got a double top here. Overall, the indicator is nice and bullish. The implication being that it isn't quite done necessarily with this level of resistance. For me, this means that there could be some movements to the downside to retest that 1950 level, possibly finding support in this area. So possibly where there might be a little bit of support found in this area. If that's going to be the case, there could be some bullish signals and an attempt to move it back up to the upside there. Silver, for example, has had a really nice, strong, recent series of moves. Got some room, but it's absolutely going to encounter some strong resistance when it gets back into this area, around about that $24 mark. Monthly looks really nice and bullish, potential higher low. Nice little bullish candle could be the beginning of a nice move to the upside. Copper, overall, again, very, very messy on that weekly time frame, but a very strong move the last week. That's a relatively good sign. I'd like to see this do a small retracement and potentially then take another run to the upside. So it's going to be interesting to me whether we get gold, which has been doing very shallow retracements lately. Lately, I mean, as in this year, it's been generally doing shallow retracements. I want to see if it's going to do another one. And natural gas. So natural gas is sitting on my watch list here. I'm curious to see if we end up getting a bit of a double bottom here. So prices come back to this previous low, a little bit of a bullish candle here. Will we see price reject this? Possibly. It's a little bit too early to tell. That weekly looks nice and bearish and therefore could just be a small move up and a continuation down. Moving on to West Texas crude. Okay, so we've got a nice little flat level breakout with bullish candle that has formed last week. And we've had this retracement back up into the moving averages last week. We've got a bearish formation, level of support as potential resistance. We've got a bearish candle, we have a, bearish moving average formation here, the 50, the 20, and the 10. Prices pull back into the moving averages, produced a bearish indecision candle, and has broken to the downside. So we've got plenty of buyers in this area. Do we have enough for it to change trend, or is it going to continue down through that? So it is in an existing trend. I want to see if it maintains that trend. Brent crude offering basically an identical setup over here as well. Okay, broken through support, generally trending down on multiple time frames, and produced a bearish setup here. Will it break the low? So for me, really looking to see if it breaks Friday's low for continuation to the downside. Wheat, interesting to me again. I've been talking about this, finding some potential support in this area. It did ultimately move up. It's come back down, broken through, and it's doing it again now. So we've got this bullish formation. We've got a lower low here, very strong bullish engulfing candle. We've got higher lows on that MACD, very strong there. And so it's attempting to turn around again. It's trying to turn around on the daily. So this week, what I'm looking to see if this is going to be the case. So we're going to break the high of Friday and in fact, break above that 723 level back up into that to see if we're going to get that shift. But interesting, nice little potential double bottom there, bullish engulfing candle, divergence on the indicators. That in isolation or traditionally is quite a bullish pattern. Okay, coffee. So coffee is trying desperately to find some support in this area. I do quite like this bullish candle that's formed at this level here as well. And overall, it's been trending higher. I've been looking for this to continue this trend to the upside. I'm very curious to see if it ultimately does that. So I'll be looking to see if there's a follow through on that. Sugar, some bearish divergence. Sorry, Usman, I know that you're asking me about a couple of currency pairs and I haven't come back to you on that one. I do apologize. I have seen them, by the way, your questions. So just a shout out to you as well, because I know you've been asking me that. Okay, so we've got a slightly higher high here. We've got bearish divergence on the indicators. Interesting, because then this would typically be classed as a double top. So what I'm looking to see if we get this week is a continuation back down, at the very least down to this level here. Overall, looks nice and bullish on the monthly, not that overextended, but you can see there's a bit of failure with the last 3 weeks worth of candles. It is struggling very much with this level of resistance. Cotton, in a nice little bearish downtrend, very nice weekly downtrend, and that monthly, very, very nice formation. There's nothing here that at this time convinces me that it's not going to continue down. Looks very much like that's the case. So out of interest, I paused the video, I created an index for the US indices. So what I did here was I've taken the Dow, the S&P, the Nasdaq, and the Russell and just put it together into a single index. Just out of curiosity, let's have a look at that to see what that looks like. So that just gives me, that'll give me a broad overview of the US indices in a single chart, and I can see that. And you can see that for the last 5 months, they have been largely range bound, not really going anywhere. You can see it very much so here on the weekly. Let's just highlight that with a nice little orange box. I like to use that for ranges. That's just my personal preference. And so generally speaking, this is a good indication of what is the state, at least of the 4 major US indices, to see what's the state of that. So they're ranging. They're a little bit more bullish than bearish right now, but they're still stuck within a range. Okay, let's go and look at them individually. Let's have a look at the Dow. The Dow producing, to me, I find this interesting here, a nice little bullish candle here. It's trying to find support. It's going to, it looks as though it's now going to attempt to push back up to 33,000. What's going to happen when it gets up there? We're going to have to see if it can get through that level of resistance or not. The S&P as well, also producing a very similar sized bullish candle to be pushed to the upside. The other thing, I'm just going to interrupt this very quickly, but the other thing I'd be very interested to note, I think I should run a poll on the community tab of the YouTube channel, whether most of you are watching this on your phones or whether you're watching this on a screen. Because if you're watching it on your phones, then of course it occurs to me that these would be very small for you to be able to see that. My assumption has always been that you're watching it on a big screen, but if it's on a phone, so I'll do a poll on that, and then just if you're watching this part, go through, please complete the poll so I can get a sense of that. And if you're watching it on your phone, then I can change the layout so that it works better on a mobile phone. So the S&P also producing a bit of a bullish signal there within a general trend. It is a downtrend, and this would potentially just be called a bear flag. So a break of the low of this would then generally be considered bearish. If we did that, we'd be like, okay, if you break below that, there'll be a continuation to the downside. But overall, we're largely within a range on the US indices, and therefore I expect them to push high. Now you can see Nasdaq pushing up at resistance, struggling a little bit with it over here. But because it has been heavily oversold for a while, nice little bullish setup here, it to me has got some room to go higher, and I want to see it break through here. If it does, if I get any breaks, I'm looking for any pullbacks and continuations to the upside. I'll be looking for long positions on that during the week. Okay, the Russell 2000, this is sort of tends to be 2000 small cap companies. It's a good indication of the bands of companies. So if you kind of, your Apple versus your much lower end, smaller size companies in comparison, but there's a lot of them. It's a good sense of what's going on with the general economy. Most of them should all be thriving together. All the different degrees of market cap should be thriving together. They're not necessarily. So yeah, we can see this dropping low. This is closer to kind of what we're seeing with the S&P. We're seeing there's a few individual companies that are thriving, but not all of them. And the FTSE itself, really very, very bearish candle for March. Now, a big bearish candle within the indices or equities is in itself not necessarily that significant. They always drop faster than they climb. So the candles to the downside tend to be bigger. And so we'll see if that's going to be the case. The weekly candle for last week is an indecision. Let's call it bullish indecision. It's got wicks, higher wicks. I think for me, it's going to be a question of does it break the high, which is a level of resistance. So a break of the high would be in itself, I think, potentially a good point, a good point of success at least. And a break of the low would obviously lead to me more likely to lead to a move to the downside. I'm leaning really straight down 50-50. It's not looking super strong. The DAX. Let's wait for that DAX weekly. That's pulled back, produced a really nice bullish candle in an area of previous resistance as possible support. This could very well be intent on attempting to continue higher. Okay. Overall, it's a nice uptrend, but there's some absolute resistance in that 15,400 area. So this is a strong level of resistance. The ASX in Australia, this big move to the downside. You can see a very strong level of resistance here. To me, more likely to be potentially range bound for now. I want to see if it can hold at this level of support and push up. However, are we seeing a range within the higher time frame, then likely to break of the low? This could see a continuation lower. Then the Nikkei has been stuck within this ranging band for quite a while. going all the way back to January last year, and it's struggling with getting out of that, you can see. So it's just ping-ponging, it's very volatile, it's not doing, when I say volatile, I mean as in a very unpredictable on a week-by-week basis. It'll just go up and down, so not great for trading. All right, Apple, moving on to individual equities. Here's something that's looking really good. Apple's looking very, very nice and bullish, really strong breakout of and above 156. The monthly is looking good. It's looking more bullish than bearish. I'd like to see this. Any kind of pullbacks to these levels, I'd be looking for bullish setups to the upside there. Let's have a look at Amazon. Amazon ping-ponging all over the place. Obviously, had a very nice bullish engulfing candle, and engulfed quite a series of previous weeks. That was the week before last. Now it's battling with this level of resistance. I would consider it a big plus if we could close above the highs of last week, this coming week, if that's going to be the case. AT&T, keeps getting knocked back off this level, out of this band, and then just keeps pushing back up. This looks as though it's getting ready to push higher. It's almost as though it's doing a little bit of this. Oh, this was the head and shoulder pattern that I looked at a couple of weeks ago. You can see, if we look at that distance from the neck to the head to the neckline, we've broken through it, we retested it, continued down, but now it actually looks like it's attempting to push back up. This would be one of those head and shoulders that potentially so far is not looking as though it's going to complete as a pattern. So that's interesting to me. That is looking as though it's attempting to push higher. So AT&T, I expect to go higher. ARC Innovation as well. Interesting in terms of this just previous week's candle. We did break a little bit higher, but it's battling between that and the 50-period moving average. So I want to see if it can stay above this level, push and break above these highs. But any of those would be considered, I think, a big plus in the coming week. Glencore, having been knocked back. So again, this is a UK stock. We saw this happen with the FTSE. We can see a big knock there. We can see a similar thing happening here. Strong bearish downtrend, produced a series of bearish candles here. Usually in this kind of situation, it would just be a continuation to the downside. Tesco, battling in this area as well. And again, break below these lows to me would signal that it's going to head a little bit lower. They're not seeing much to love about Tesla at this time. Vanguard producing a very nice little bullish setup here. I'm curious to see if it can break through this temporary trend line I put there. A little bit of a bearish line, that's all it is, bearish line in the sand, or whether it's going to stay within this triangle and form a bearish breakout pattern there. But this in itself is a bullish setup. Question is, can we break through that? Even better would it if we can break above that 372 level. Doesn't have to happen, but if it does, that would be great. So this was, Tesla was the previous one. Why do I feel like I've skipped something? What has happened here? We had FedEx, Spotify. Have we done all of these? Okay, give me a second. Okay, I'm not really sure how I jumped through all of these. I thought I got through those really quickly. So I've highlighted, I'm looking here at American Express, and I was sort of saying, would this be potentially a bit of a head and shoulders pattern here as well? And if it did, it would have to head down towards 123 and then break below that. So far, it's battling a little bit. So if we just kind of zoom in this week, it is within a downtrend here. I want to see if it can stay above that 156 level, if that's going to be the case. Berkshire Hathaway, there we go, really nice bullish candle. That has some promise, although it doesn't look that strong when I look at it on the weekly or on the monthly. That's what I want to see. Will there be some possible resistance just where it's sitting in this area? Will we battle there? Can we break above that and head back up to the top? But actually a very fair possibility here is it'll fail at 300 and potentially head lower. I am not sure how I skipped that. Coca-Cola looks really nice and bullish, looking pretty good there. I'm quite happy with that. That monthly candle looks really nice and bullish. The weekly looks okay. It's broken out of this weird consolidation that it had, and that looks like a very nice trend continuation. I'm just going to move that over there. It looks like a nice little trend continuation candle. Can it get past this $61 resistance level? Let's find out. BP, real big knockdown, but a little bit of an indecision inside candle there as well. That monthly looking like that to me would normally be a rejection of that, and so based off this alone, I'd be expecting price to head back down to 32. We'll see if that's the case. We've got ExxonMobil. I'd like to see this come back down. It's back into these old highs, so this is not bad. Inside bullish candle, not super bullish. Let's see if we break the high of that. I would expect that to continue to the upside. But that daily has also produced a bit of a bullish candle here as well. General Motors, just range bound, very bearish at this time, but there's a level of support, and bullish candle in that area could be what will turn around if it's to remain in that inside that bullish ranging motion. And you can see a big knock here for JP Morgan, resistance knocking it down. So for now, I expect this to continue to head lower. We've got Adidas. All right, let's see how this goes. Okay, Adidas, this really sort of bearish rejection of these lows, overextended to the downside, move up, and producing this bearish candle within that. I think I'm going to be looking for breaks of the low here for a continuation to the downside. It's a complete mess on that daily. It's really not giving away much. Meta, overall, continuing to push higher, similar to some of the other tech stocks, managing to close and push a little bit higher there. So for now, it's stalling a little bit, but overall, I expect us to attempt to continue to push higher. Morgan Stanley coming back down. It's broken the lows over here. It's a very strong bearish candle. The momentum in this case should be to the downside, should continue down. We're going to see how it handles that 81 level. NVIDIA also has done really nice pushing through these. It's been great. To me, it was very much underappreciated. The NVIDIA products are in most of our laptops here, if you like using the GeForce cards, for example, but technologically, they're very reliable as well. Oh, I had an inverse head and shoulder here. This was what was so cool about this. It appears to have reached its target. So inverse head and shoulders here, and it's moved on, done it really nicely. Now might possibly be a couple of retracements here, but overall the trend looks nice and healthy. I expect continuations to the upside. Netflix also managed to find a little bit of a double bottom here within an uptrend. That in itself is a bullish signal. So I'm looking to see if this can continue to the upside. We'll see if that's going to be the case. PayPal is trying to break through this line. It really, really is. A lot more bullish candles in this area. I think it may well get its wish, but I'm looking to see if we get a move. I'm just going to borrow you over here, please, and see if we get a push through this week, break to the upside. So some of these are performing better than expected. We've got Spotify, strong level of resistance, can't quite get through it. It's battling. You can see it's a lot more obvious when you look at it on the weekly, battling in that area. But let's see if everything else, actually this one doesn't give much clarity. I'd have to see if we break through. This one looks more inclined to try and fail. Okay, then we have got Spider, this one as well, coming back down to level of support. Nice little bullish candle here, but overall it looks weak. So possibly just a dead, I was going to say dead cat bounce, but I don't want to use that terminology. Just a small bounce there before possibly coming down and testing that level again. FedEx, as I was saying, breaking through that trend line. It's gapped up. That looks pretty good. Really nice bullish candle there. That's a solid bullish engulfing candle. This last week's candle not really managing to go anywhere. So possibly just because that big move hasn't been able to do much. So this week I'll be looking for a break of the low or of the high. This could be a potential pause and go. So what's a pause and go? You get a nice move, then you get a single candle, one or two candles, and then it continues up for about the same amount of distance. So a break of last week's high for me would be a nice bullish signal there. Now we're kind of back on track with Tesla. Tesla within a monthly downtrend, it is still in the danger zone. Let's call it that, danger zone. It is still within the danger zone here. I'm looking to see if it can break out of this to the upside. Would be bullish. That 200 level is very significant, guys. It is. So if we could stay above that, a break above 230, then it's very likely, or much more likely, it's going to return back up to or closer to its old highs. But if it can't do that, it's likely we could see it return back down to its old lows or most recent lows. And we've got Vanguard. That was the bullish candle I spoke about. There we go. So I'm looking to see if that will break to the upside. Okay, let's move on to Treasuries. I'm just going to use the US 10-year T-note. Looks nice and bullish. You can see it's pushing a little bit high. We haven't had that for a while. Last week I spoke about, on the weekly we spoke about that being a nice double bottom. It was a very nice bullish signal. It's following through on that. But I was going to say we're still seeing a bit of move on gold, a little bit on bonds. They're looking more bullish than bearish, but not panicky. It's not gaining momentum. It's not gaining traction. So again, like it's almost like the world is on a week by week basis is trying to decide how panicky it's going to be for the next week or how nervous it needs to be. It doesn't seem that it's that nervous this week, but we're not free and clear of anything yet. So we have to maintain that extra bit of cautiousness. The good news being that there will be a point where we should return back into a bull market. The question is that going to be 2023 or is that going to be 2024? And how will we know if that's going to be the case? That is something that will start to show itself in the price action. It will stabilize. Candles will get smaller. We'll see more consistent trends. They'll last for longer, but we're not seeing that at this time. Okay, cryptos. Let's wrap this up, guys. So cryptos didn't do much. Okay, they moved up, hit resistance, and then just stayed where they are. So it makes sense. A break of the high, this should be a continuation. Again, it could be a pause and go, or break of the low. This could see it just having a bit of a retracement. But the weekly's in an uptrend for the most part. Daily's in an uptrend for the most part. I say that as in it's generally doing lower highs and lower lows. It's not clean, it's not pretty, but it is technically doing that. And breaks of the high of that would see it going a bit further. Solana, not offering anything that different. Uptrend, nice little daily uptrend. Could something like that, for example, be a nice little bullish signal to the upside? We'll see. There's definitely resistance in this area. I don't doubt that there could be some problem in that in that zone if we encounter some. So let's see how that plays out this week. Cardano and Binance all very similar with their issues. This looks nice and bullish. That looks like a really nice, strong little attempt to break out. Again, I'm curious to see if that's going to be the case, if we're going to get some follow through on that. And that kind of wraps it up for this week. Whoa, 30 minutes. Okay. I'm going to leave you this again, please. Any feedback, good or bad, or anything you'd like to see or change of format, let me know. I'm feeling as though it could be better. It's like a bit of a blunt tool at the moment, and I would like it to be sharper for all of us. So with that in mind, have a fantastic week, and I will see you in next week's video. And yes, thank you very much.